What's up, guys? Welcome back to UCR Forest Academy channel here on YouTube. Welcome back to my channel once again. It's been long. I uploaded something here on YouTube. There was something that happened, so I don't really have any chance to do that. But sorry about that. Today I've come up with something unique. I've come up with a very good tutorial, and this is a VIP tutorial that I'm about to share. The reason why I'm sharing it is that I just want to give you guys a quality tutorial, and I believe that at the end of the whole day, if you watch this video to the end, you will be so happy with yourself because you're going to learn a lot of things that you are struggling to know. Even if you have known that before, if you watch this video to the end, you're still going to come across the part whereby you will see that maybe I was doing it wrongly or I didn't even know how it works. So right now, I would want you to watch the video to the end because we're covering up a lot of topic, which is what top-down analysis using Fibonacci retracement to in search of entry. Yes, top-down analysis using Fibonacci to in search of what entry. And we're also going to be looking at how to follow the trend correctly and how to correctly plot your fib and how to use the 61% or 78% level for entry and how to place your stop loss correctly using Fibonacci retracement tool. See, I would want you to stick around this video and watch to the end. Believe me, you are going to understand something that you have not understood before. So also before we dive into what we have in this video, please like and subscribe to my channel here on YouTube. Turn on your notification icon so that you be the very first person to be notified whenever we drop a new video. Also, when you look around, you see that we have dropped a lot of videos in the past. I would also want you to go and check out one of them. If not one or two might be of a helpful guide to you. Check it out, you see that you won't regret it. Also, if you are looking for an online academy where you're going to learn forex from beginning to advanced level, UCR Forest offers you that very opportunity. Believe me, in UCR Forest Academy, we will tutor you and will enable you to understand how forex works from beginners level to advanced level. It's not like your usual online community class where they normally drop a video for you and allow you to struggle. No, in this very particular online community, your growth and your development is one of our earnest priority, and believe me, it is like an exceptional. You're going to benefit a lot. So try to reach us out with this very particular number here on WhatsApp, and believe me, we will assist you on how to join us. So let's really dive into what we have on this particular video to see how we can correctly do all these things in the chart. So now we'll be looking at this is Euro USD, and first of all we'll be starting with top down analysis. We'll be starting with top down analysis. So whenever you get to a pair, there's one thing that you need to tell to yourself, that there's nothing you need to ask yourself is, where exactly is this trend pushing to? As in, that's number one question you need to ask yourself. Where exactly is this trend heading to? If you're able to discover where this trend is heading to, that's when you will know what to do. And you are not discovering where the trend is heading to on 1 minute time frame. You are not discovering where the trend is heading to on 5 minutes time frame. Neither are you discovering that in 15 minutes time frame. No, it's not done that way. You need to go to higher time frame like daily time frame, 4 hour time frame, for you to know exactly where this trend is pushing to. That is the most important thing. If you don't know how to do that, please watch this video to the end. You will come to realize how you can comfortably do that. So we're going to be discovering where the trend is heading to, and when we discover where the trend is heading to, we're going to be taking our next step. That's when we must have discovered where the trend is heading to. We'll be covering up a lot of pairs like Euro USD, Australian dollar USD. We'll also be checking out gold as well. We'll be checking out and USD JPY. Yes, we'll be checking out USD JPY, gold, Euro USD, GDP USD as well. So let's quickly see where Euro USD trend is heading to on daily time frame as the number one step. So on daily time frame, we switch to daily time frame. This is Euro USD here on daily time frame. There is loading. So this is Euro USD here on daily time frame. Let me take this thing up. Okay, I think I have something here. Okay. So Euro USD here on daily time frame. Let me unlock this and drag it to the top. It's clearly locked. So let me. Okay, this one is locked as well. Okay, I want to create a space so that I'll be able to see what I am doing. So Euro USD here on daily time frame is what? Euro USD here, we're gonna squeeze out. Number one thing you have to do, you have, because if you know you're looking at this way, you won't even know what is happening, right? So look at what you are gonna be doing. You're gonna do this squeeze out, like I don't know whether it's zoom out or squeeze out, anyone. However. So this very particular stuff, you can see this is Euro USD right on daily what? On daily time frame. See, I wouldn't even want you to concentrate on this thing because it's not really necessary. It's not what? It's not really necessary. You are a day trader, except if you are a swing trader. That is when you start looking at all what has happened in the past. But I just want you to pay attention to what I'm about to show you. So this is Euro USD on daily time frame. And what can you see the trend of the market? The trend of the market is clearly what? Is clearly ranging. The trend of the market is clearly what? Is clearly ranging. You see, the market is what? The market is ranging. This market is not pushing up, neither is it what? Coming down. It's just there, it's just static. You can agree with me, because when you look at the very particular one, if you look at the very particular one, you see how massive the market was. The market, so this is what we call what? A downtrend market. Whenever you see this kind of thing, you know that the market is what? Is trending. But when you look at what is happening, what is going on here, you come to realize that Euro USD is just static, it's consolidating. So whenever you spot a consolidation market on daily time frame, it could be a massive uptrend market on what? On 1 hour time frame. It will still be a massive uptrend market on what? On 4 hour time frame and 2 hour time frame. So do not just say because it is a ranging market on daily time frame, I'm not interested. You see, we're going to be breaking down all this range, and you see how we can catch entries. And I believe that if you follow all these rules, all these things won't be what? Won't be difficult. It's not that you're not going to lose, but the truth of the matter is that we are trying to make your losses not to be like that of somebody who doesn't even know how this thing works completely. You are, at the end of the whole day, you see that there is something unique that you have come to realize on this very particular one, this very particular video. So you see, Euro USD on daily time frame is consolidating. So what are we to do now? We are to get the high and the low of this very consolidation. We are to get the high and low of this range. So if you're able to spot the high and low, that's when you'll be able to know what to do next. So let's just take out this very particular one as well. I don't know why I don't know why all these things are hiding. I want to take out this. Okay. Okay, see where this thing is displaying itself. So I'll be taking out this because I've used that to show you that Euro USD is currently what is currently doing. So where is the, so you can see the market pushed up to the very particular high, right? Printed this low, pushed up the very particular high. So we're gonna be plotting from the very particular high, regardless of all this. So we're gonna be plotting from this high and extend it to the what? To the future. So you see, I'm gonna be using this my horizontal tool and keep it this way, keep it this way, and then I also keep to the down. I also place it at the down like this, and then when you can see that we have marked out the high and the low of this range, and the high and the low of this range, you know that the high is what? Is a resistance zone, and the low is what? Is a support zone. And you know that the resistance zone and support zone on daily time frame is very, very strong. When the market gets to a resistance zone on daily time frame, there's a tendency it's going to sell massively down when the market gets to a resistance zone in 5 minutes time frame or 15 minutes time frame or even 1 hour time frame. So you cannot compare what is happening on daily time frame to what is happening on those time frames that are under it. So it's very, very essential you work with the daily time frame so that you can follow the what? You can follow the trend. So you can see that Euro USD printed this new high, printed this low. When the market returned back to this resistance level, it could not break it. Whatever you are seeing at the very top is what we call what? Is fake out. The market tried to break out of the range, and then induce a lot of people, or like was like signaling to them that he wants to go to the upside. A lot of people entered by at this very particular. Let me zoom out to show you. A lot of people entered by, as you can see, a lot of people was trying to enter by. That the fact that you saw a green candle in this particular chart is telling you that people are going in for a buy, that there was some buying momentum there. So a lot of people were trying to enter for buy here. And what happened after all these fake outs? There was rejection. The market was pushed down back into the range. So what can you see now? The market now attempted again to push to the upside. Then a lot of people might be seeing this thing as a breakout of the range. They might be looking at this thing as a breakout, and then they will start entering orders on the top of the very particular. People that are trading break and retest strategy of a thing will be going in for a buy immediately. The market retest the very particular what? Retest the very particular daily time frame a resistance zone, thinking that the market is about to go to the upside. And what can you see? What they did that they massively what pushed the downside and liquidated everybody. So what you can just see now, this is fake out, this is fake out, this is what fake out. Let me zoom out so that you can see all this thing. This is fake out, fake out, fake out, fake out. As in they try to fake out, they faked out everything. All these things also can be called what? Rejection, because the market could not what? Could not break above all these things and start pushing to the what? And start pushing to the upside. After everything, you see them returning back to the support zone, arrive here again. This is normally happens because what? This is a resistance zone. A lot of others will be there. So they might even want to come in to liquidate some people before what start pushing down. Or sometimes they might want to move above just to show people that they want to buy and they start entering their orders. So as you can see, when the market arrived here again, what really happened here? There was like you can see the market pushed up, retested. A lot of people went in for a buy here, and people that went in for a buy here, if they had kept their stop, their take profit above this very zone, like swing traders, or maybe you are the one that normally targets a massive risk to reward ratio, you kept your take profit above this high, at maybe somewhere here. That means they're going to be what? There's going to be a problem. But if you had kept it normal, you wouldn't have lost this trade, because see, in as much as the market break out of the range, retested, then bought a little, and the market came back to what? Came back to that very particular what? Range. Telling you that Euro USD is currently what? Consolidating. The market is what? Is consolidating. So what exactly now, or where exactly is Euro USD now? So Euro USD now is on daily time frame support zone. Is where? At daily time frame support zone. So when you look at this very particular thing that it has arrived at daily time frame support zone, what are you to do? That means that generally the market is supposed to what? Buy. The market is supposed to what? Buy. But I want to tell you that you are not to go in for a buy because you have discovered that the market is now on a daily time frame support zone. No, what you are to do now is to concentrate on this leg. Concentrate what? On this leg. Concentrate on this massive bearish what? Bearish movement. Concentrate on this massive sell to the downside. Now, as we are going down to 4 hour time frame, we are looking for a support zone, or we are looking for a resistance zone where we can keep selling, not where we will buy, not where we want, not where we will buy. Before we can buy on this very particular thing, we need to make sure that we have seen a shift in market structure. We need to make sure that we have seen what? A shift in market structure. And if we did not see that shift in market structure, we are not what? Interested in this very particular what? Trade. All we have to wait for is a shift in market what? Structure. So you can see now we will switching down to 4 hour time frame to see whether we can see a resistance zone or whether we can see a support zone turn resistance, so that we can now apply our Fibonacci retracement tool. So a lot of people will ask me, why am I not judging what is happening here? Why am I not using this very particular thing to judge what is happening here? Yes, the truth of the matter is that you are right. You are right, but I want to tell you something. If the market is pushing to the upside this way on daily time frame, it's probably the market is on massively uptrend like this, and then all of a sudden you saw that the market is returning back this way, and you have that confidence that whenever the market tests this very particular zone, that is going to buy this way, and then you came and placed your buy order here, you place your buy limit order. The truth of the matter, there's a tendency that you're going to get a sniper entry and the market will move to the upside. And there's a tendency that this market will take you out and keep what? And keep selling. Are you getting me now? So the truth of the matter there is that when you are trying to place any buy here, because you spotted that on daily time frame that the market is returning back to a daily time frame order block, there's a tendency you are going to lose that trade, because what you are doing is you are going against the trend. This is a daily time frame for a crying out loud. This is a daily time frame. And whatever that is happening on daily time frame, you need to focus more on this leg. You can draw this very particular zone and extend it, looking at what exactly the market will do when it tap into that very particular what zone. Not when it tap into that very place you start looking for a buy immediately. No, it doesn't happen that way. If you start looking for a buy immediately, there's a tendency that the market will take you out. Are you getting me? So you are to look for, if the market arrive at that very particular zone, what you are looking for. Okay, let me draw it well. Let me draw this thing well so that you come to understand what you'll be looking for on other time frame. Let's say on the daily time frame, the market is on this very particular uptrend this way. The market is pushing to the upside this way. You see, the market is in an uptrend market this way, and all of a sudden, you spot that the market is returning back this way. You spot that the market is returning back, and then you placed a buy limit order here, and then this is the way the market will be returning back on something like 4 hour time frame or 1 hour time frame. Then the market has tapped into that very particular what? Into that very particular zone. The market has tapped into that very particular zone, and you're going in for a buy. Brother, It is not that way. When you start going in for a buy, you are really against all these people that are returning back to the very particular what zone. You need to make sure that you see on 1 hour time frame that the market what pushes to the upside and break the very particular what and break the very particular high. Upon retracement this way, that's when you need to what go in for a buy. But if you are the one that is entering for a buy immediately, think about a scenario where the market will just buy a little. Let me keep this in but will just buy a little and take you out. It normally what? It normally happens. Do not say that it will not happen to you. It normally what? It normally happens. So you need to wait for a shift in market structure shift before you what? Before you go in for that very particular buy. Or better still, you have to place a sell limit order at a very particular what? At a very particular high. Reason is because you are following the trend. You are standing in a way that you don't know whether the market will respect this zone. You don't know whether what the market will respect this zone and what and start pushing to the upside. But you don't know whether the market will disrespect this zone or whether it will respect it a little, tap into the very particular place that you placed your sell limit and keep on what and keep on selling. So there are two things, they are 50-50. So what I will advise you to do is when you have realized that the market has approached a daily time frame resistance zone or support zone or whatever entry that you are taking here, your stop loss need to be what? Need to be little. Need to be what? Need to be little. It should be like if you are going in with one loss size, please reduce it to 0.50 loss size because you know there are two tendencies here that the market will respect the daily time frame and then pushes to break this very particular what 1 hour time frame or 4 hour time frame what resistance zone where you have entered your sell limit, or there's a tendency that the market will just respect it a little, return back to that very particular 1 hour time frame zone that you marked at and keep what selling. So these are the two things that you are putting in place. You don't want to miss out on one of them, and that is why you are going in with what with lesser lot size. So that is how what to do that. So let's proceed to see what exactly we are going to be looking at on 1 hour or 4 hour time frame. I think we will be using 4 hour time frame to see whether we can be able to get a resistance zone or support zone that we are expecting. Whenever it is in a downtrend, it's supposed to be what? A support zone. So support turn resistance. So we are looking at whether we are going to see a support zone that will turn to what? Resistance, or whether we are going to see in terms of market structure, whether we are going to be seeing a high where we will be what? Where we will be selling. In terms of SNC, whether we are going to be seeing an order block with clear liquidity inducement where we be what? Will be selling. So you see, I can cover up all strategies for you so that this thing will not look like it's working for only one particular strategy. So let's go down to 4 hour time frame to see whether we can catch any one of that. So on 4 hour time frame, now, this is on 4 hour time frame. Remember, you have to move from daily to 4 hour. You don't need to move from daily to 15 minutes time frame. Do not try that. Do not move from daily to what? To 15 minutes time frame. Now you have known that the market is currently at what? At daily time frame what? You have known that the market is currently at daily time frame resistance support zone, and what are you really expecting whenever the market arrives at a daily time frame support zone? Is it not to buy as usual? Yes, it's to buy as usual. So now we will now be marking out our support turn resistance zone, and we still be looking at it as our zones as normal market structure or a high as a market structure. We want to be looking at it as if it is SMC, we'll be looking at it as order block. Are you getting me now? So you can see a lot of strategies is under this very particular thing. It's just that they use a lot of English to confuse you. So now you see, now let's concentrate here because we can see that this was, you can see that fake out, the market faked out twice. You see that two fake outs here, you can see, and from there the market started dropping massively to the downside. So let me just start from here and start marking this very particular support on resistance still as your everything. So you see this very particular thing, you see this is a support on what? A support that was expected to what? To turn as resistance. And whatever you see at the bottom of this what? Is a fake out. So you see as the market what? As the market break the support zone, it came back to what? To retest it. If you are using market structure or you look at what you are going to do in terms of market structure, this is a high where most of you will be looking at what? Where most of you will be looking at what? To sell from. Whenever the market returns to this very particular high, you sell. So that is it. So if you're a support and resistance trader, it's only meant for you to drag the very particular thing this way. So I'm just trying to cover everything. So we are to mark out this very particular low as well because you know that this is a support zone, right? And see as the market came and broke it, so we're going to mark it out this way. We're going to keep it this way. And then we're also going to be keeping this very particular one. This is another word support zone here. I know it's very, very tiny, but when we go down to 1 hour time frame, you will see all these very particular thing in what? In a clear form. You're going to see that all of them in a what? In it's going to expand. Are you getting me now? So now you see, these are all the zones. If you are using market structure, it's just for you to mark out this high, mark out this high, and mark out what this very particular what high. So now let's break down to 1 hour time frame to see this very structure to expand. It's going to expand on 1 hour time frame. So on 1 hour time frame or 2 hour time frame, anyone you are comfortable with, you can just see that. So you see on 1 hour time frame, you can see the structures are now what are now big. You can see we can see that support zone clearly. Even if you are taking the high as a terms of market strategy, you can see you got that. And this is a new what? This is a new high. So what are we to do now? So this is where Fibonacci retracement what? This is where Fibonacci retracement to what falls in. Now, Fibonacci retracement will enable you to know the depth of a retracement, will enable you to know the depth of what? Of a retracement. It will enable you and filter out a lot of noises for you in the market so that you know where a lot of people are going in for what? Are going in for a buy or sell. You see, I'm using that a lot of people because a lot of traders look at the Fibonacci retracement tool because this is the only tool. Even when you go to your trading view, on your trading view, you are going to see it as the only tool there. You are not going to see your ICT strategy tool there. You're not going to see your SMC strategy tool, your key ability, what you go, all these things. You're not going to see it there. That is why I'm to tell you that all this thing was just a man-made, like people just came up one day and started speaking English. But it normally what? It normally happen. It normally works. Even me, my strategy is SMC. But you see this Fibonacci retracement tool, you need to have it in your what? You need to have it as a favorite on your chart because this speaks a volume. This is the most important thing that you need to have. You getting me now? So we are going to be plotting our Fibonacci retracement just from the origin of every particular sell move. Just for the origin of what? Of every particular sell move. I think I was making a video here on Euro USD for my students, and there were a place we are looking at. So I will equally be using that report. So if you are asking me now, what exactly is the origin of any particular move? What do you mean by the origin of every particular move? Now, let me show you on the diagram I've already drew before. So, where is that diagram? Okay. Oh, the diagram is very big just because we moved to lower time frame. So, you see, this is it now. This is it on what do you call it? This is it now on 1 hour time frame, right? And you are asking me what is the origin? What exactly do you mean by origin? Now, the origin means this way. Let's say the market pushed the upside, printed a new high, or printed a new support, or printed a new order block, or printed anything that you are calling it, and then the market is returning back this way. You see that the fact that the market sold from this side down to this level, this is the origin of what? This is the origin of that massive sell that dropped down to this very particular what level. If the market was to buy to break this very particular high, this is currently from here to this very particular high. This was where the orders was initiated. This was where all the buy orders was what was initiated. This is the origin of this massive what push to the downside. If the market retraces again, this is another origin of a what of this market push to the what to the upside. So there's some tendency where you see the market will be returning back this way. The market will print a new high, the market will print a new low, and you see all these very particular things. These are internal structures. If somebody was to ask you what is the origin of all these things returning back, or what is the origin of every particular massive push to the upside, this is it. Do not be confused and start plotting your feet inside this. Everything that is currently happening here is happening inside this low and this high. Everything that you are seeing inside here is currently happening what? It's currently happening inside this low and very particular what high. So you should need to what know that very particular what thing. So this is what origin of the very massive push to the upside. You're waiting for the market to return back here so that you keep buying to the upside. So you see, so this is now Euro USD. If somebody was to ask me where exactly is the origin of all this massive sell before the market retrace this way, this is it now. Now the fact that the market sold again, this is it. So, but I want to tell you that this, you see this very particular push, the market retrace like this. This is what we call what? This is internal structure. Because if you are to look at this very particular Euro USD in a plain tablet, or you will come to realize that after the market sold massively like this, all these things can serve as what? As correction, can serve as what? As retracement, can serve as what? Mitigate, as can serve as what? Mitigation. Anything you call it, it can serve as what? It can serve as anything. So it can serve as retracement, pullback, mitigation, whatever English you can still call it. Are you getting me now? So all this very particular thing is currently happening in this high and this low. It's currently happening what? In this high and this what? Low. So we are going to be taking out everything happening here as what? As internal structures, as what? Internal structures. So now we're going to get our trading range. Number one, what's our trading range? This is this high, and then what's the low of the high? You can see that the low of this high is what is here. So I can use this two here as well. This is the low of this high. Remember that this very particular horizontal two you are seeing here is that daily time frame what support zone. So now we are going to be plotting our Fibonacci retracement to pay attention at the 61% level or 78% level. We are not to take a trade at the 50% level. The reason why you are not to take a trade at the 50% level, I will show you now. Because you know, at the end of all these things, you are going in with your money. You are not going in freely. You are going in with money. And some of you will not want to be risking a huge capital just to make a little capital. Some of you will not want to be risking will not want to be risking 1:1. That is it. Are you getting me now? So now we're going to be plotting our Fibonacci retracement to just from this high down to this low. That is how to plot it whenever it is what? Whenever it's in a downtrend market. So you're going to be plotting from this high down to the very particular what? Down to the very particular low. So you see this now. So you can agree with me that the markets are, so we'll be looking at the 61% level, number one, and then we'll also pay attention to the 78% level. So where is our 61% level? Our 61% level was the previous support zone that has turned what? Resistance. Can you see? Our 61% level is the previous support zone that has turned what? Resistance. We're going to be extending it, and I'm going to be telling you the two things that you're going to be seeing on every particular thing. Now, where is our this thing? Where is our 78% level? That is the extreme zone. Can you see? Is the what? Is the extreme zone. Look at it this way now. This is the extreme zone. So you see, this is it now. So this is 78% discount zone, and this is what? The 61% discount zone. Where is your 50% discount zone? This is this line. That's a 50% discount zone. Now I'm to tell you that if you are to sell from this very particular thing, remember that we are selling because we have discovered the market is selling. And whatever we are doing here is that we want to follow the trend. We want to work, we want to follow the trend. And it's now quite unfortunate that we have realized that the market has hit a daily time frame support zone. And we are marking out a resistance, a support zone turn resistance, or a high or a other block just to sell for one last time, or just for the market to hit us out, for us to know that the market has what? Has changed direction. That is it. You see how I was able to judge this very particular thing. We are selling because we want to follow the trend. Number one, we don't want to buy now, but we have that very mindset that the market, we have that information, and the market has arrived at a daily time frame support zone, but we should not be buying. We are waiting for the market to hit that our own particular resistance zone or support zone, or a high or other block, just to clarify to us, to tell us that exactly that the market has changed what? Direction. If the market was to respect it, we are winning. If the market was not to respect it, we have what? We have lost, but we did not lose the way we expect what to lose. So you see, now that we have spot the 60%, the 61%, the 78%, and then we also have seen the 50%. If you are selling from the 50%, let me tell you where you're going to be placing your stop loss. If you are selling from the 50%, your stop loss need to be what? Above this high. Your stop loss need to be what? Above this side. That is it. As in, and your take profit will be at the low of that what? At the low of that Fibonacci retracement too. Most of you tell me no, nah, no. It's not that way. That you're going to be keeping your stop loss just above this high. Now let's be realistic for once. Let's be what? Let's be realistic. Now the truth of the matter is that you are placing your stop loss this way. Do you know that, and if you place your stop loss this way, now you have two more zones that you're going to be trading from? Because there's a tendency, or there could be a tendency where the market will work, where this market, as was returning this way, this market will just do this kind of thing, will take you out, tap into that 61% level, and what? And sell a little. And then you yourself will not be happy. You will not be what? You will not be happy. So there's a tendency as well that the market will even tap into that 61% discount zone and decide to dip inside the 70% discount zone before dropping massive to the downside. So you that is trading from the 50% discount zone, you are saving yourself from all these very particular things. And that is the reason why you are placing your stop loss just above that high. Now you can see your stop loss is very what? Is very massive. Or there's another way to do that. If you have intentions to go in with one lot size, now what I will tell you that you want to use a tighter stop loss, right? I will tell you that you need to divide that your one lot size into three. You need to divide it what into three, because there is a tendency you are going to lose that first one on 50%, and there's a tendency you're going to lose that one on what, on 61%, because most of you, after you hitting, after the market taking you out this way, you will still what, you still return back to the 61% discount zone, and then place another one, keep your stop loss under it this way. You what, you will still lose, you still what, you still lose, and another one again finally, before you now admit that 78% level will now be the last place where you what, where you take a what, where you take another sell from. So you see, this time around the market has what, has played with your emotion on three or four times. So I would just want you to save yourself all these things. So if you can bear the massive stop loss this way, if you can bear it whenever you see the market is now already close to hitting your stop loss, if you can bear it, then no problem. If you cannot bear it, or you divide that trade loss size into the very two forms and trade like this. But why doing all these things? I know that you waiting for the 78% discount zone could look like you could miss out on the trade. I know, fine, but think about you also losing the trade as well. Do not be thinking about winning, 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 winning. Think about you also losing it. Are you getting me now? So even if you want to trade from the 61% discount zone, your stop loss need to what? Need to rest above this high. Your stop loss need to what? Rest above this high, because you don't want a scenario where the market will still want to dip inside the what, 78% discount zone before dropping to the downside. You don't want to see that kind of thing. That's why you are keeping your stop loss covering that 78% what, discount zone. So your stop loss should always make a decision for you. It should be that whenever the market hits your stop loss, it should tell you that it's either the trend of the market has changed, or the trend of the market continues. Are you getting me now? It should not be that the market hit your stop loss and then it is still telling you that you should go in for another buy or sell. No, it should be that your stop loss should always make a decision for you. Your stop loss should always what? Decide the next what? The next decision you need to make. Is either is telling you that the trend has changed, or it's either is telling you that the trend what? Continues. Now let's say that the market what? Pushes to the upside and hits all our stop losses. And then what are you to do? Is it not for you to know that the market has changed from uptrend what, to down, from downtrend to what, from massive downtrend to what, to uptrend. Now when you have discovered that the market has changed, do you know that you have known that the market has changed on what, on higher time frame, on what, on high, you have seen a change of character on what, on higher time frame. Now you have to report that your fee and look for another 70% level to take price what, up whenever it retraces back to that what, back to that zone. So you see now, so it should not be that the market hit your stop loss and you're still pressing that sell again. It's not necessary. You get me now? So for the sake of this video, I'll be using the 78% discount zone because I found it as one of the most deepest retracement, and I'll be taking out the 61% discount zone. The reason why I don't even trade from the 61% discount zone is that normally my stop loss normally is wide. Is what? Is wide. So I won't be doing that kind of thing. So now you can see I'll also take out this very one as well. So I've told you how you can approach these very three things now. So now you can see our 78% discount on just framing here. You see we are risking somewhere around 37 pips, and we are targeting to make what, 60 120 what, 120 pips. This is it. So you need to set your stop loss just above the resistance zone. Your stop loss need to rest what, just above that high of that Fibonacci retracement tool or resistance zone or whatever you call it, or other block or breaker block or anything you call it. You knows what you are calling this kind of thing. I know you as a trader, once you have spot this signal, you start telling yourself this guy is taking a trade from support or is taking a trade from here. That is it. So you just need to, anything you can call it that way. But you see, with Fibonacci retracement tool, we have immediately in less than 5 or 6 minutes, we have gotten our 78% one Fibonacci retracement tool. So what we have to do now is to wait for market to return back to that very particular what, 78% discount zone, and for us to go in for a buy. You can still set your sell limit order here, or you can wait for your confirmation entry like change of character to decide on what to do when the market arrive at that zone. So whatever that is just happening at the 61.78, I'm going to address it as what, as trap. SNC traders will call this as what, as liquidity. We call it as what, as liquidity. So those people that are trading support and resistance, those who are trading support and resistance will not agree with me because they will say that this is a breaker block or this is a support or resistance. But for me, I'm going to call it as what? As liquidity, because I am calling that liquidity because if I'm to take a trade from here now, if I'm to take a trade from here, my stop loss reward will be massive. So you see, we have seen where we are to sell on Euro USD just for moving from a daily time frame down to what? From daily time frame to 4 hour time frame down to 1 hour time frame. You see how simple this thing is now. So now I'm to tell you that if you are looking for confirmation when the market arrive at this zone, switch down to 15 minutes time frame or 5 minutes time frame. Look for change of character to go in for a sell. If you are using for pending orders, that means you must accept this thing and go and rest, wait for market to return back to there and what? And drop to the downside. So you see how we have analyzed Euro USD from higher time frame down to what? To lower time frame. So what we are now up to facing the reality, right? Like we are now accepting the reality. It's either this market now return this way, it's either this market pushes to the upside, break, touches this zone this way, and then we might see something that look like this. The market might respect it this way and sell a little, maybe tap down, return back to the very support zone, or return back to the very time frame support zone, or anywhere somewhere here, and start what? And start pushing again to the upside. Okay, and start pushing again and might take us out. The reason why it's taking us out is because of what? This market currently is what? Is currently as a daily time frame what? Support zone and might what? Take us out and now tell us that this is what? This is now a what? A change of what? A massive, a higher time frame what? Major change of character. And upon retracement this way, we're now targeting and we're now go in for a buy, targeting the what? The next daily time frame what? Resistance zone. So you see how we are able to do this, and it is looks so cool and what? Simple. Now let's check out Australian dollar USD. Let's check out Australian dollar USD. You will see that the same thing we did there is what we are going to do there. We are not going to change words. We are not going to change any steps that we have what we have taken. So you see, on that we're going to be switching to Australian dollar USD. Australian dollar USD. So you see, this is Australian dollar USD now. So you see, so this is Australian dollar USD. What are we to do next? We are going to be clearing everything that is on this chart. We have cleared. And the next thing is to go to daily time frame. To go to what? Daily time frame. Now on daily time frame, this is the trend of the market here on daily time frame. On what? On try to squeeze out to see what exactly is going on here. So you see, this is Australian dollar currently on daily time frame. Even this market is still ranging here. You can see this very market is still what? In a ranging market. You can see this is a ranging market. There's nothing you will not tell me. This is what? This is a ranging market. This is what we call what? A trending market. This is the downtrend, and this is market consolidating. You get me now? This is market consolidating. So what are we to do? We are to approach the market the same way we did to what? Euro USD. So we're going to be removing this, and then we'll try to get the high and the low of our range. I think this one's going to be look more difficult, but there's no problem. You see, the market printed, the market retraced. I'm going to be taking out this particular place. I will use this very particular one, and then I will equally use this very particular one, this very particular high this way, or better still something that look like this, and then let me keep it this way because I was taking out from the this floor. So you see, so it's gonna look this way. So you see, this is the height and the low of the range, and you can see all these things are what? Are fake out, fake out, fake out. Like all these things are what? Fake out. All these things are fake out. Like the market just faked out a lot of people thinking that they're going to sell for a long time, but they end up not what? Not selling. So you see, so now what are we to do now? We are to concentrate on this leg, and we have seen that Australian dollar USD has arrived at a daily time frame resistance support zone. Sorry. So what are we to do now is to take price to the upside. Are you getting me now? For SMC traders, the market has arrived at your order block. Support and resistance traders, the market has arrived at a support zone. ICT traders, the market has arrived. What do you normally call order block? I don't something like that. Anything is arrived there. It has not. It has arrived there. Whatever strategy you are trading now, give it a name. So that is it. So this is now we're going to be proceeding to what? We're going to be proceeding down to 4 hour time frame to mark out our support and resistance, or to mark out our breaker block, or to mark out our order block, or to mark out whatever strategy name you are calling it. So this is it. So we are concentrating on this leg. Nothing concerns us what is happening here. So 4 hour time frame. This is the market now on 4 hour time frame. So now I'm gonna be starting from here because I don't want the video to be long. Later you can try and mark out other ones as well. So this is a support on resistance. I keep it this way. So again, this is another one again. This is another one here. So it looks more tiny here on 4 hour time frame. Let's go down to 2 hour time frame or 1 hour time frame. Anyone you are more comfortable with. So you see, so another one is here as well. So another one is what is here. Please, anything you want to call it, call it. It's everything you want to call it. It's not that my strategy is support and resistance, so, but I'm just using this support and resistance just to cover up a lot of things that you must have given it a name as, because I know that support and resistance is the foundation of the forex market, not that thing that you are calling it. I'm an SMC trader. I trade SMC very well and I follow my rules. You get, but I normally respect this support and resistance very well because this is how I trade it. You get. So you see, this is it now. So we're going to be going down to, let me use 1 hour time frame to expand these very particular things I've marked out. 1 hour time frame here. So on 1 hour time frame, we have to catch the origin of every particular move. So you see, the market sold massively to the downside this way. All these things could look like what? A correction back to this zone to what? To drop. Are you getting me now? It could look like a what? A correction back to this zone to what? To drop. So I'm going to be removing this particular thing to keep my chart very clean. So what are we to do next is to plot our Fibonacci retracement to just to get the high and the low of different particular stop to get the 78% discount zone. So I will do what? I'll plot it from here and give a particular high down to this low. So you see this way. So you see the market is currently at the 50% discount zone. I don't have any business there because selling from there will make my risk or will make my stop loss massive. So I will just be marking out the 78% discount zone, which is somewhere what? Which is somewhere here. So you see, this is what some remember the market is now at a daily time frame support zone. There's a tendency that all this thing you are doing here, the market might break it. But we are just looking at just taking a sell for one last time. For what? For one last time. If the market break this thing, let me tell you, if the market break this thing, me, I will no longer look for any sell because I will focus my mind on looking for what? Looking for a buy and start targeting a long-term what? A long-term deal. So this is my 78% discount zone. I'm not paying attention to the 61% because my stop loss is going to be what? Massive. My money first. My money what? First. So you see, so I'm going to be taking out the Fibonacci retracement to just to show you how it looks like. And you see how it looks like now. So SMC traders, this is your clear of liquidity. This thing. This is your inducement, right? And this is your what? Your clear of liquidity as well. You see, for support and resistance traders, let me show you now. This is your support. You see how this thing rhymes now. Support and resistance. SMC traders, this is your other block. ICT traders, this is whatever you call it. Are you getting me now? So you see, all these things are the same, but you guys will just be giving it a lot of. So the truth of the matter that you just need to know how to correlate these things and know how to filter out noise in the market so that nobody will confuse you. So now your own is now to wait for market to return back to the very particular zone so that you start selling. It's either you place a pending order, a sell limit order this way. Let me drag this thing like this. It's either you place a sell limit order this way and then keep your stop loss just above this zone and then keep your what your take profit just under what this low. So you see, this should be it. So this part you are risking 13 pips just to make 37 what 37 pips. That's good, bro. That's nice. You see, so that is it. So most of you again might still be looking at the very particular one as well. Most of you might still be looking at the very particular one. So most of you might still be looking at here as well. So you see the particular one as well. You know, even if you are looking at this one, let me show you again. If you are looking at a particular place, this is a clear of liquidity as well. If you are looking at a particular, if you tell me that you are not comfortable taking a sell from here, that this very place is an early place to take a sell from, that this was a massive sell to the downside, and all this thing could look like a correction, right? Or you replot your fib, from this high down to this wall, down to this low. So you see, that is it. So where is your 78% discount zone? That is it here. So you see, this is your 78% what discount zone. You see? So you see, this is your 78% discount zone. See, somewhere here. And then if you are to go in for, then that means that people that are selling just under here, you are attributing them as what? As people that are selling earlier. So whatever that is happening here is what? Is early sellers. For you, these are premium areas. So you are waiting for market just to return back to the very particular place, to the very particular zone. Or let me not place it this way. This zone, your stop loss just need to rest above this high, and then your take profit just need to be what, under the low of this Fibonacci. So you see, so that is it now. So you see, this is what, like, the, so there are two traders, that where some two traders see things. So a lot of people might be looking at the very particular one first, a lot of people might be looking at this one. A lot of people will equally call this thing what, will equally call all this thing what, liquidity for the very particular what zone. I think I will even be going for this extreme zone. I'll be going for what, this extreme zone, because if I'm to remove this Fibonacci retracement tool, if I'm to remove the Fibonacci retracement tool, you come to, let me lock up this again. You come to learn that after the market sold massively like this, the market attempted to push up. It could not get to somewhere here. This is an unmitigated zone. Is a what? An unmitigated zone. Is an unmitigated zone. So you see, as the market pushes out again, the market retraces. So the market has not gotten to here. So I think all these things could be what? Could be liquidity. But there's a tendency that the market will just, this one that look like this, the market might tap into this, sell a little, and then take everybody out to get to this zone before dropping and start pushing massive, before dropping like this to start pushing up to the upside. So this kind of thing might happen. So you can, you can look at any one of them of your choice, anyone you look at, anyone you are comfortable with. So you get, so this is how to do a top downward analysis. Let's look for something like an uptrend market. Now I think I have USD JPY. This is going to be my last example. USD JPY, USD JPY. So let's try to see the market on an uptrend market. Or better still, I think I'm going to be ending this video here. I think I'm going to be ending it because this video is so long. But if you follow these steps, believe me, you will definitely learn how to do this thing in a more simple manner. So let's look at, the network is disturbing. Well, maybe I'm going to be stopping here. Maybe I'm gonna be stopping here. Believe me, if you follow this way, you will end up getting what you are looking for. There is nothing there. So let's look at USD JPY for the one more last time. This is USD, is USD JPY. I think I already have a setup there as well. This is USD JPY now. So it's coming. Then let's go to more cleaner charts. Okay, I'm gonna use this thing. So still trying to put my PC to okay. So a quick one, guys. Let's do that. So let's remove all these things, and then okay, now on daily time frame, where exactly is USD JPY heading to? Where exactly is USD JPY heading to? So you see this particular stuff this way. If you try to zoom out this way, you will see that the market has clearly been on a massive uptrend. The market has clearly been what? On a massive uptrend, and there was a massive sell that this way, and the market is now pushing to the upside. So what are you to do now? What are you to do now? So we are going to be measuring the depth of okay, we have seen that the market is pushing to the upside, right? And then if you are to ask, do you know how far this market could get to anywhere? Like could get here and start dropping. You don't know, right? Or you replot of it from this high down to this low. And then where is your 78% discount zone on daily time frame? You can see this is it here. Although when you are doing this kind of thing where you are trying to sell from here down to the downside, you are truly going against the daily time frame what? The daily time frame trend. But you're gonna keep it this way because you know that there's a tendency that if the market tap into that daily time frame 78% level, that is what is going to sell, is going to sell. So there's a tendency the market might what, might do that. So let's just switch down to 4 hour time frame. We're paying attention to whatever that is happening on this low, not to sell when the market not to sell when the market arrive at here. No, we'll be looking at a resistance on support and be looking whether the market will break it down to keep dropping to the downside. So this is a 4 hour time frame. Remove this very particular thing. Now get the origin of any cells. I'm gonna be looking at it from here. Oh, sorry. Okay, you can see the market now retraced a little and started buying massively from here to the upside. See, the market has been buying massively to the upside this very way. The mind buying massively to the upside. So if I'm to plot my feet from this very particular low up to the very particular what high, I'm gonna be seeing that my 78% level is what is resting just under here. This is my 78% level. So you see, whatever that is happening on top of the very place, could be what? Could be a premium zone buy for me. But I'm going to be showing you guys an early thing I did that very particular place. Let me remove this thing. Let me remove. And then I'm going to be showing you guys what exactly I did here on 2 hour time frame. I was also on 1 hour time frame, I think. 1 hour time frame, you see the market has been doing something that look like this. So just pay attention to somewhere here. Pay attention to somewhere here. This was like the last retracement of the very part. After the market broke this very particular major high, I think I will switch back to 4 hour time frame so that you're going to see something. After the market broke this very particular major high, it broke the very particular, it retested it and bought massively. So I was like, I think I should start looking from here. So you see, I plotted my feet from this very low up to this high. I see, and then I have here as my 78% what discount zone. So I'm looking at a buy from this particular zone. I think I'm looking for a buy at this particular zone. The reason why I'm buying is that I see that the market is trying to get to what? Trying to get to this daily time frame what? 78% discount zone. I'm not looking at to selling. I'm not looking at what to selling. So that is every single thing I have on this particular video. If you have any question, please ask me. Drop it on the comment section below. I will answer you. Believe me, I will definitely answer you. And if there's any more other videos to make on this very topic, I will still make it to clarify everything for you. Thank you, and may God bless you.